Good morning, good afternoon, and good evening to you all, wherever you are in the world. My name is Nick Ferrand, and these are my Italian one-take property tours. And this is Mackie. Hello, Pooch. Today we are going to talk about mortgages. A lot of you have asked about mortgages, whether you can get a mortgage in Italy, and my good friend Marco has come here for coffee. We're having breakfast, Mac, aren't we? Yes, we are. And we are going to talk about mortgages, and he is a brilliant person, used to be my bank manager, and now basically works as an independent financial advisor. Are you ready? Let's go. Come on, boy. Good boy, Mac. Hi, Marco.
Hey, Johnny.
How are you?
I'm fine, you?
Yeah, good to see you.
Good to see you too.
Right, so we have a bit of...
How's it all?
Oh, it's absolutely fantastic. Should we have a bit of breakfast?
Yes, please, I'm starving, yes.
Okay.
Yes.
Scusi, what would you like?
Un cappuccino di soia e quelle 2 girelle alla cannella.
Invece io prendo un cappuccio molto caldo, non tanto scuma, con brioche e marmellata. Grazie. Marco, it's nice to see you. Okay, so what we're going to talk today is about mortgages. Mortgages.
Interesting.
Right. Can you explain to the viewers how we can get a mortgage or how they can get a mortgage?
Right. You mean your clients, non-residents, right? People coming from abroad, right?
Non-residents. We're talking about people who are coming here to buy second homes in Italy and they're looking to finance their properties.
Oh, right. Well, the process is, I would say, pretty simple in a way. Pretty simple because they just need to come here, tell us. Oh, well, by the way, what's the average percentage they ask normally when they buy a property?
It varies, but
in terms of finance.
It does vary, but I did a video a couple of weeks ago, and if you haven't watched that, it's how to buy a property in Italy, and I suggest that you watch that video. And what I understand from it, and probably you need to confirm this with me, is that the maximum loan to value is 50% or the value of the house for a mortgage of for a period of 10 and 15 years. Is that correct?
Yeah, it is correct. Well, normally 10 years is the average. Okay, if we go to 15 years, we need to ask for a special permission from the bank. 50% loan to value is the average level for all banks, at least in my experience. Major banks, minor banks in Italy, they all stick to this percentage. This thing about giving money to non-resident, lending money to non-residents, is banks are a bit cautious because they just cannot have a confirmation about the cash flow. Okay. So their incomes have to be shown exactly like Italians do. So banks ask for a tax declaration, nothing else. Tax declaration, P60 if they come from England, or if they're self-employed.
Oh, that's interesting. Can you get a mortgage if you're self-employed?
Yes, you can. Okay, the thing is that you need to have a straightforward income scheme. Okay, it has to be really clear to them. If it's too complicated, they wouldn't bother, getting into it.
Right.
It has to be either a tax return form, either from the US, from Australia, from Canada, UK, whatever it is, the standard UK, tax return form, or in case they are employed, it has to be a P60 in England.
For how many years do the banks request that information?
2 or 3 years is enough. 2 or 3
so,
years.
So 2 or 3 years of a tax return, whether you actually have a salary or whether you're self-employed.
Well, if you wait, because if you're self-employed, it's a bit different. You need to show your balance sheet. Okay. Let's say you come from the UK. The balance sheet has to be certified by a chartered accountant. Okay. That's the main thing. Okay. There has to be a stamp on it by a certified chartered accountant, and then everything, not just the balance sheet, every document that is in English has to be translated into Italian.
Is that done by a registered translator, or can you...
Okay, it can be done in Italy. It has to be certified by the tribunal here in Perugia.
Okay,
in our case.
so you can't do it on Google Translate then?
No, you can't. You can't do it. It has to be certified by a public officer, either in Italy or abroad. What I do suggest is the process could be much simpler and less expensive if you do it in an Italian consulate abroad. Okay, if you go to London and you do it in London, it's probably easier and cheaper. Because if you do it in Italy, okay, the translator has to go to the tribunal. They have to put stamps on it, and
Stamps.
even stamps are expensive. I mean, every 2 pages you have to put 16 euros, a 16 euros stamp.
So you need to have a translator, basically,
Yeah.
qualified translator. Buono.
Grazie mille.
Okay, so basically, obviously, I mean, as one would expect, in Italy, if you're living or wanting to get a mortgage in this country, it should be in Italian, or it needs to be in Italian. That's just perfectly understandable. Can I ask you a question, Marco?
Yeah.
If I am a pensioner, or I am coming up to, yes, Mac, am I coming up to pension age? Can I still get a mortgage on a house in Italy?
Well, it depends on the type of pensioner you are. I mean, it depends on your age, of course. Because since we are talking about not very long-term mortgages, if you become a resident, if you are a resident, by the way, and you're young, let's say you're 40 years old, you can get a mortgage up to 30 years, term. If instead we're talking...
Wait 1 second, we need to recap there. So you said that if you're young, you can get a mortgage up to 30 years. Is that a resident or a non-resident?
If you're young and resident.
If you're young and resident.
Yes, then you can go up to 30 years. Okay?
Right, okay. Let's not talk about the resident thing, because that's a completely different subject.
But we are saying, your question was about pensioners, okay?
Yeah.
Let's say you become a pensioner in your early 60s, okay?
Right.
Then you just have a 10 years term for the mortgage, right? Because that's what they give you as a non-resident. Let's say 10 years, 15 years maximum. If you're 60, they say, okay, will he live to his 70s? The answer is, of course, yes. Then they would say yes, okay?
But do you have to have a certain amount of income? Because obviously you've got to justify paying. So if you're coming up to retirement, one would assume.
Well, yes, yeah. We're giving that for granted, of course.
Your pension will obviously cover the amount of repayments over the period of time of the 10 years. Is that correct?
Yes. There's another percentage we need to talk about, Nick. It's okay. We talked about the loan-to-value percentage. That's 50%. Then there's another key percentage that banks have a look at, and that is the relationship between the amount of your new installment. Let's say you're going to have the mortgage, okay?
Right.
The new installment plus any other installment you have, either abroad or in Italy, okay? That has to be divided by your net income. Let's say your monthly net income is £5,000, okay? If you have, if the sum of your new installment, the installment of the mortgage you're asking for, plus any other installment you have in your country,
yes,
exceeds, let's say, 35-40%, then the bank would say no. If it's below that threshold, then it's very probable that they say yes.
So 35 to 40% of your income coming in.
Yes, yes. But the thing is, the higher your income is, the higher that percentage can be, stressed.
But you're still talking about a pensioner up to about 30%, 50% maximum of loan to value?
No, wait. Loan to value is the value of the mortgage on one side compared to the value of the property. That's the loan to value, okay? This other percentage I'm talking about, it's about cash flow, okay? So how much money is going out every month from your, let's say, family, budget? So
let's use your analogy that somebody is actually making an income of $5,000 US dollars or £5,000 or the equivalent of that amount of money per month, then really, if I understand this correctly, what you're saying is that if you've got more than 35% of that as disposable income, the bank will look at your mortgage favourably, or have I got that completely wrong?
Yes, that's correct. That's correct.
Okay, fine.
But
And it takes into consideration all the other loans which I might have and all the
absolutely,
other payments
yes.
which
and
I
you
might
have to
have.
show them. You have to show them.
So you
Okay?
have to declare absolutely everything
yeah,
to the
yeah.
bank before. I mean, the last thing you want to do here is, I suppose, to buy a property in Italy and find yourself, especially if it's a retirement home, and then find yourself struggling to make ends meet. I mean, I would have thought that basically those people who are retiring would have their retirement settlement, or it would have their pensions, and so they would almost know exactly what their monthly income would be.
Yeah.
Okay, Marco, let me ask you another question.
Wait. Because there's another thing. Banks are actually concerned. Okay, that 35%, 40%, it is a threshold. Okay, they have that as a guideline for mortgages to non-residents. But the question they ask themselves is, okay, this person is asking, this client is asking for a 500,000 euros mortgage. Okay, he's going to pay, let's say, 2,000 euros or whatever as an installment with this mortgage. Then he's got other financial commitments in his country for another 2,000 euros. Okay, if his income is just £5,000, then the percentage is not. I mean, that percentage is not satisfied. But the more the net income.
No, Matt, come.
Is he hungry?
Of course, he's always hungry. He's a
Oh,
dog.
it's a dog. The more the income is higher, the easier it is to not respect that percentage. See, because the question is, as I've been a banker, I've been a banker a bank manager for many years. The question we were asking ourselves was, will the family be able to live with the rest? So if my net income is £10,000, then it might be easy to get above that percentage and go to 50%.
So what you're saying, like always, you have to live within your means.
Yeah.
So you can't come to Italy and decide to say, I'm going to buy a €1 million house and get a mortgage of 500,000 euros where my net income per month is only 4,000.
That's it.
So you have to be sensible and look, and you would help somebody calculate prior, wouldn't you? So you basically say, okay, so you put your cards on the table, well, your accounts, that is. So you put your accounts on the table, and then basically you will go through, you will have a deposit money, and then Marco would work out exactly how much mortgage that you could get with your income which is coming in, regardless of whether you are in full-time employment or basically self-employed or a pensioner, which is quite interesting because a lot of you have sent me messages and you've said, can I get a mortgage if I'm retiring? And Marco's just answered that question, and the answer is
Yes.
potentially. Yes.
Potentially, yes.
Not just potentially, but yes.
Yeah. Again, it depends on the type of pensioner you are, because if you are in your 80s, I would say probably not. And I would say never get into debt if you're that old. I mean, you should just keep safely away from mortgages, loans, and whatever. There's one other thing I want to say. There's another big, huge difference between the Italian banking system, the UK banking system, and the US banking system together, these two together. Italian banks, when you ask for a mortgage in Italy, and they give it to you, they lend the money to you, of course, they put a legal charge on the property, okay? Mm-hmm. But as I always used to say to my clients, especially to my non-Italian clients, I was telling them, see, that legal charge is a negative security for the Italian bank, because they see it as a way to get their money back only if you don't pay the mortgage, okay? If you don't pay your installments. And how does that happen in Italy? How and when does that happen? It's a very, very long process. It might take years. So the thing is, do not come to Italy and ask with the idea of asking for a mortgage, because at the end of the day, the property is a security for the bank. The bank doesn't counter that. The only concern is your incomes. Will he or she be able to give us the money back? If the answer is yes, then that's okay. We can consider that mortgage. Otherwise, don't think about, okay, if I don't pay one day, just the example you gave me, okay? If you want to do something that is beyond your means, your financial means, and you think, okay, but then the bank has the property as a security. Okay, the banks in Italy don't think like that, because in Italy, well, in England, you can repossess. Banks can repossess properties, right?
In England,
In England, they
the
can,
bank
right?
will repossess your house
Yeah,
within
yeah.
3 to 6 months.
Months, you say months.
Months. And you're talking what? 3 to 6 years?
Years. We say years. Okay, not 6 years, but maybe 4 years is the average. And by the way, the banks never repossess properties. It's forbidden in Italy to repossess properties. They have to call for an auction. Okay, they have to go to a tribunal. They have to call for an auction. Then the
And so this takes a lot of time.
a lot of time.
So
It's a
you
very long
can't get a foreclosure on your house.
Absolutely.
Someone comes along and sticks a notice on your door and you have to leave, or the bailiffs turn up and say, okay, fine, you have to either pay this amount of money or we are going to repossess your property.
It doesn't work like
It
that.
has to go through a process. You have to go to the courts and it takes years to do it. So, okay, so just want to recap. So what you're saying to me, Marco, is basically that the loan which they give is on the individual, and although they take a charge on the house, it's the individual they look at, not the property. I suppose that's in a way why they only allow you to take 50% loan to value, because what they're thinking is that if it does take that amount of time to actually repossess the property, they can virtually guarantee that they can get their money back.
Not really, because
No.
this same cautiousness is. I mean, they're so cautious with Italians as well. So, to Italians, if you're a resident, you can get up to 80%. Okay.
Right.
But for Italians as well, their concern is the incomes, not the property, because it's the same for them. I mean, if an Italian resident asks for a mortgage and then doesn't pay back after 2 years, doesn't pay back the mortgage, for the bank, the process is absolutely the same. To get their money back, they have to go to the tribunal, call for an auction, and wait for years until they get their money back. So the main concern is the income. When it comes to non-residents, this 50% percentage, loan-to-value percentage that they apply, is just because we have financial data banks in Italy, okay, from the Central Bank of Italy, and all lenders have to tell the Central Bank of Italy, the Banca d'Italia, they have to tell if you have a mortgage, if you have any type of debt. So all banks can have access to that, and they can see if you're
if your credit is good.
yes, if your credit
Right.
score is good or not.
Right.
Since they cannot do this with non-residents, then they apply this lower level of loan to value.
Okay.
See, that's
Right,
the main
so
that's the
that's
main
it.
reason. See,
All right.
they cannot. Okay, the other reason is that they cannot actually have a hold on the cash flow, because as long as if you have incomes and you work in London, your salary or whatever your income is will be credited in your current account in the UK. So I'm not seeing it, right? I just have to believe that what you have brought to me is true, right?
Very interesting. Let me ask you another question, Marco,
Yeah.
if I may. How long does it take for the mortgage process? So let's say I found my house. I would like to finance the property. What are the steps that somebody needs to take?
Okay, let's talk about the steps first. Steps are collecting all the documents. Okay, first of all, the income documents we talked about, and eventually, if the client has other commitments, financial commitments abroad, he needs to write down the list of all the properties he's got abroad, plus the financial commitments. So all this has to be collected together with the passport. It's very important that once you I believe you said this in one of your videos about the codice fiscale.
Yes.
Yeah. Okay. So it's very important that once you, before you show up at with your documents to the bank, you need to have your codice fiscale.
Let me just explain to everybody who hasn't watched that video. A codice fiscale is a tax code, and we as a real estate company will get that for you. It's just a process. You need to sign some forms, and we will have that, and that's very important. And Marco, I assume that all this correlation of all these documents will then need to be professionally translated into Italian.
Absolutely. That's the difficult part, because Italian banks want every single line. You have an idea, or at least you remember the UK tax return form.
Yes.
It's several pages, right?
Yes.
And it's mainly numbers, right?
Yes.
They want every single word to be translated. So it has to be translated. Nothing in English can come, the original document has to come in together with the certified translation.
Well, I understand that. I mean, you're dealing with another country, they don't speak English, and basically we all speak Italian. Okay, Marco, so basically, going back to the amount of time that it takes to get a mortgage, in your experience, with all the paperwork that needs to be translated and everything else, and you found your house and you're really excited, and you've come to you start the process, how long does that process take?
Okay, let's say from day zero, we have all the documents. Everything is translated. We have it here, and we can bring it to the bank. Let's count at least 30 days, not less than 30 days. 30 days to have the file approved by the bank. Once it is approved, we need to set up the meeting with the notary, because it has to be done through a notary. And in 1 month the process could be done, ready with the bank.
Wow.
But starting from the day that all documents are ready.
Oh, so you need to correlate all the documents.
Yes.
So
wait. But what I do believe is before starting the process, it's much better to have a pre-analysis of at least the financials, okay, the numbers. So we can say, yes, they do it. We can talk to the bank. And
that is absolutely excellent. Yeah. So basically what Marco is saying to you is that if you were looking to finance a property in Italy, the first thing that you should do is get all your ducks in a row. Just get all your paperwork ready, and almost potentially looking at actually translating the documents so you're ready to go.
I believe we should do this before translating the property.
Before translating
we take a look at the numbers, at the financials, and we say we can talk to the bank and say, okay, they're willing to do it. The bank says we're willing to do it. Otherwise, if they say no, you don't bother translating the documents.
Okay. All right.
It might happen that they say no, but one thing I was thinking yesterday with the banker, they're very happy to lend money because interest rates have gone up a lot. So now they're looking for clients. So they're 2 years ago, the process was difficult for all clients. Less easy for all clients because interest rates were negative. Okay.
Yeah.
And why bothering lending money to a non-resident for 1 million euros and then getting a return of 0.5%?
That's really interesting.
We have to say that now. People from the US and from the UK as well, they know that even in their countries, interest rates
are going up. Can I ask you, just finish off now, because you've been incredibly helpful. Thank you so much. What is the current interest rate today?
I would say
roughly
for a 10 years term fixed interest rates, it would be something between 2.5 and 3%.
2.5 and 3% for a 10-year term fixed rate. Yeah. And that's something which is incredibly important because the fixed rate is for the entire duration of the mortgage. Is that correct?
It is correct. Wait.
Oh,
I
no.
have another clue. There's another difference, and we need to tell your potential clients that in Italy, mortgages are only repayment mortgages. Okay.
Repayments.
There's no such thing as an interest-only mortgage. Okay?
No such thing as an
So we're
interest
talking
only.
about interest rates, but everything goes with repayment mortgages.
Okay.
It can be either variable, fixed interest rates, or a mix of these two. But then in every installment, you find a bit of the principal you're giving back.
That's very kind.
Okay.
Right, Marco, thank you so much for
You're
your
welcome.
time.
You're
I
welcome.
hope this was useful for you. I'm going to link Marco's details in the description below. He's a great guy. He's been in banking for a very long time, and if anyone can, he can. My name is Nick Brand, and these are my Italian one-take property tours. For those of you who have subscribed to this channel, I can't thank you enough. And if you have not subscribed to this channel, could you please just push those buttons? And that would help me so I can help you. Until the next one, I'll see you very soon. Thank you. Bye-bye. Thank you, Marco. That was fantastic.